One of the best performing stocks over the past decade has been Celsius Holdings, the drink company, and shares are really crazily valued right now, trading for almost 15 times sales. Price to earnings multiple is over 100, but there's still a lot to like about this company and the tailwinds behind it. I do own shares, and I am not selling anytime soon if the momentum continues for this company. So I want to dig into exactly what the next opportunity for Celsius is, and that is international growth. We're not going to see a lot of this in first quarter results, which will come out in the next month or so. But over the course of 2024, I think this is going to be the next growth driver. Not only do you have the traditional drivers of growth like better placement in a lot of places where Celsius has reached retail, adding the number of stores, and just increased customer demand overall. But also you have Celsius entering into new markets where it has never been, and they've added a few very important markets early in 2024. So that's what I'm going to dig into today. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's look at where Celsius generates its revenue, because I think this puts the international opportunity into context. This first chart shows where Celsius generates its revenue, and you can see that a vast majority of revenue is generated in North America. So primarily the US, and I'll get to that in just a second, but only a little over $50 million in revenue came from Europe, Asia Pacific, and other geographic regions, as they call it. So that means most of those markets are completely untapped markets for Celsius. And this is where the company's business model really starts to be an advantage. With a traditional business model, if you are manufacturing and distributing products yourself, you're going to be limited on how much manufacturing capacity you have or how much distribution you have in any given market. So if you're going into a market like, let's say, France, and you don't have any relationships with stores, with retailers there, it's going to be really hard to break into that market from a standing start. But Celsius has leaned on Pepsi throughout most of the world, so they're going to have an advantage in distribution by leveraging Pepsi and their distribution relationships around the world. From a manufacturing side, Celsius also doesn't manufacture its products. It uses manufacturing partners or co-packers who are actually the ones that mix the drinks and also put them into cans, put them on a truck, and deliver them to Pepsi. So Celsius is not doing any of the manufacturing or the distribution. This is really just a brand company and a formulation company. So they're coming up with the brands and the drinks that they want to make, and then they help facilitate sales with Pepsi and then tell their packing partners, hey, this is what you need to produce and deliver to our distributors. So that's a very asset light model, and it allows you to scale the business very quickly. This is how a company that's selling a physical good can grow as quickly as Celsius has. Typically, you run into problems with your own manufacturing capacity or with capital when you're making a physical good and trying to grow that business. Celsius doesn't have those constraints because it's leaning on partners for both manufacturing and for distribution. So let's get to some of the expansions that we should expect in 2024. These will start to impact the income statement later this year. On April 4th, Celsius announced that they were going to expand into France. It's going to lean on a distribution partner called Suntory Beverages and Food. And this follows a deal with Suntory Oceania to expand into Australia and New Zealand. I'll get to that next. That came on March 26th. So a new distribution partner, along with Pepsi, is bringing them to Australia, New Zealand, and France. This is also the same distributor that brought them to Great Britain and Ireland. Pepsi is going to handle the distribution in Canada, which was also announced earlier this year. In January, those 3 countries were announced. So again, leveraging major distributors to enter into new markets. So just to go through the list this year, Canada, United Kingdom, Ireland, Australia, New Zealand, and France. So 6 pretty major countries that Celsius is going to be expanding into. We should see those international numbers potentially double this year. I don't think that's out of the question, given the really, really low sales that they have in international markets right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So Celsius has a lot of opportunity to grow in international markets, and it really needs to grow to live up to the current valuation. That's just the reality of the situation. But as investors, I want to have the kind of tailwinds of growth that Celsius has, despite the fact that it's a very expensive stock. Now, my cost basis is a little bit lower than where we stand right now, and I wouldn't be surprised if shares drop if there's any hiccup in the growth story. But I want to put some of these numbers into context because it's incredible how quickly Celsius has been growing over the past 5 years. Celsius has a compound annual growth rate of just over 90%. So sales have been growing at 90% for 5 years. You take that back to 10 years and you're at 62%. Just an incredible growth rate for any company. Now we're going to hit walls in the US in particular where that growth rate isn't going to be able to grow that quickly. But analysts are still expecting that over the next 2 years, Celsius is going to grow revenue at 37%. So that's still an extremely high growth rate. It means that revenue is going to more than double every 2 years at that growth rate. And so that's how you get to a little bit more reasonable price to sales and price to earnings multiple. Now, the other thing to watch is, can Celsius expand into international markets and maintain really high margins? They amended their distribution agreement with Pepsi earlier this year and included some language about incentives to Pepsi. So does that mean that Pepsi is going to be taking a little bit higher margins? This is one of the challenges with distribution agreements, is when you're not actually delivering product to customers, when you're not actually laying out where those products are going to be on store shelves, you're putting some of that off onto distributors. And in the case of Pepsi, Pepsi is trying to balance, where do we want to have Pepsi products, the products that we actually make and sell, and where do we want to have Celsius products? So they want to have the high growth products like Celsius in their portfolio when they go into retailers. But they also want to make sure that their traditional products, where they're going to make more dollars in terms of revenue and margin, are going to be treated potentially even better than Celsius by those retailers. So a lot of balancing there when your business model is not actually producing or distributing these products yourself like Celsius has. But I love that management is now pushing into more international markets. That was really one of the next growth avenues for the company, as it's done a lot of its growth in the US and expanded geographically around the country. I know Celsius wasn't a product, I'm in the upper Midwest, that was available here a couple of years ago. So once they started getting that Pepsi distribution deal, suddenly it was showing up everywhere. And I think that was a playbook that drove a lot of growth in the US. And now it's a playbook that they're going to put to use internationally, and a lot of opportunities to grow around the world. So keep an eye on what Celsius's growth rate looks like, not only in the first quarter, but then we're going to get tailwinds from these international numbers in the second, third, and fourth quarter of this year. But what do you think about Celsius stock? Do you think it's too expensive? What are your expectations for growth? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.